Welcome back, guys, to part 2 of the supply and demand zone series. This is the second section to my Beginner to Winner series. If you haven't checked out those market structure videos already, please make sure that you do. This is the second video of the supply and demand. Today we're going to talk through what actually happens in these supply and demand zones, how to correctly identify them, and understanding why there's a raid of the high and the lows before a big push, why there's imbalance left behind, and why price is ultimately magnetized and drawn back to these areas. If you haven't done so already, please make sure you like, subscribe, and comment below, and pop that notification bell so you can be notified when the next part in the series comes out. So let's talk about what is actually happening in the market all the time. Okay, so prices go up, prices go down, and that is based upon whether buyers are outselling the sellers, the buyers are out buying the sellers, or the sellers are outselling the buyers. Okay, pretty simple. Again, we imagine that set of scales. It tips one way if there's too many sellers, and it tips the other way if there's too many buyers. Okay, now in order for this to happen, okay, the market moves by orders. Okay, and what we mean by orders is somebody deciding to sell from here places a sell order. Okay, and that adds a little bit more weight to the sell side. Equally, somebody decides to buy from here, and that adds weight to the buy orders, okay, and that adds a little bit of weight to the buy side, okay. And when there is an imbalance in terms of sellers and buyers, if there's more buyers than sellers, the price moves up. If there's more sellers than buyers, the price moves down. But there's different types of orders that they can use, okay. I'll talk you through a few of the different ones. Okay, you have a classic sell order, which just goes into the marketplace like this, okay. The market sells at these structural points, okay, that's a classic sell order, okay. You also have a classic buy order, okay, pretty simple to understand. People are buying from these points as well as, okay. And with this, what happens is stops are placed underneath these areas, okay. So let's say these are our stops, these red lines, they symbolize our stops. So stops are placed. Let's get rid of that. Okay, oh, have we got an arrow there? 2 seconds. Style, let's get rid of that arrow for now. Okay, so that's a stop there, that's a stop there, that's a stop there, okay, and there's a stop above there, and there's a stop above there. So as price trades through these areas, people get stopped out, and when they get stopped out, it takes weight out of the marketplace. If, for example, as price moves down here, these stops are being ran, these stops are being hit, what happens ultimately there is these buyers are taken out of the marketplace. So they're now out of the marketplace, okay, which means the sellers technically have more weight. The stronger money now is in the seller's hand. Again, this sweep happens down here, and these buyers are taken out of the marketplace, and now the sellers are even stronger. But it's a constant battle all the time. It's like good and evil, okay? It's going up, it's going down, it's going up, it's going down. And just as price moves down here to take out these buyers, and price moves down here to take out these buyers, there's more buyers being added into the marketplace. The point is that the market is quite psychological, and the people will see that the trend is down. And so more sellers, generally, if you zoom out on any chart, if the market is clearly moving down and we're having these multiple breaks of structure down here, okay, this is happening over and over and over again. We're having these multiple breaks of structure. Well, most relatively decent traders will see that the market's in a downtrend. So probably most people are going to be selling, and that's what moves the market down until we reach these areas. Discount area is what we're talking about here, of course. Premium areas is what we have at the top. So, the previous videos we've discussed this in detail. But once we reach a discount area, well, this is where smart traders will start thinking, do you know what? Now we're in a discount area, the likelihood of this market continuing to sell is probably quite slim. So what's the smartest trade? Well, the smartest trade is probably to start looking at buys. So then less people start selling, more people start buying, and then the cycle starts all over again. Okay. The thing to be aware of is that it's not just buy orders and sell orders. Okay. So what they do is they buy, so there's the two other types of orders, okay, limit orders and stop orders, okay. A limit order would be a sell from here once prices come up to a region, and a stop order would be a buy from here once prices come up to an area. Okay, so once price gets up here, people can choose to sell. Okay, so those are your limit orders, or they might just sell at the market price. That's a market order. You've also got stop orders, which basically says, well, when the price gets up to here, I want the price to continue up. Okay, so with these other orders, there's also more stops. We now have stops below these buy orders, and we have stops below these buy orders. So everywhere in the marketplace, you've got stops. Okay, and this is what creates the liquidity in the market. Now, for the bigger players to make their money, they really want as few people in the marketplace as possible. The reason for that is they want the market to be clear so that they can push it in the direction that they want to push it in. So by having people in the marketplace, and let's copy these across to here. Okay, let's copy these across, get rid of that one. Okay, let's copy these guys across to here, because this is probably a better example of it. Okay, let's say we've got all these sells and buys here with stops above and below. Okay, what they do is this first move, it takes all of these people out. All of these people that had stops there, they're taken out of the marketplace. Okay, so they're gone. So that's one part of it clear. But when they want to get back down to here, okay, they still have lots of open positions. So the bigger players, let's mark them as green, okay? The bigger players, they have orders everywhere, okay? They have orders above, below, above, below, above, below, above, below, okay? And they have loads and loads and loads and loads and loads of orders in there, okay? That's where they place most of them, okay? Because that is their demand zone. So by moving this marketplace down first and foremost, they take out the liquidity of the early buyers. So these guys who have bought from down here, you and me, they take us out. They sweep us out of the marketplace. We're now gone. Then, now they've swept all the buyers out of the marketplace, they push it up to take out all of these sellers. Okay, these sellers that again have sold here and sold here. Okay, they push the market up, they take them out. What happens when they do this is they have sell positions and they have buy positions. Their sell positions are, of course, in a big negative because they've pushed the market higher. And so they can't have that. So they need to bring the price back down so that they then can close all of their negative sell positions. And what happens is they then close these sell positions off, leaving their buy positions in the marketplace. And then guess what they do? They add in a load of extra buy positions. They add in loads more buy positions, and the marketplace shoots up for ultimately the bigger move, which was to break this trend higher. Okay, so that in very simple terms is how supply and demand works. Okay, these areas are areas of manipulation so that the bigger players in the marketplace can make their money. And in these moves, they're taking everyone out of the marketplace. So all we've got to do is we've got to learn how to stay on the right side of them. Okay, I'm going to draw it for you another way around. Okay, so let's talk about demand zone. It's exactly the same the other way around. Price moves up like this. Okay, all of a sudden we have a big move up and a big move down. Okay, and this takes out liquidity on both sides of the marketplace. Okay, both buyers and sellers are taken out of the market. This is a manipulation move that we keep an eye on because we know that there is big money in the marketplace. There is strong money in the marketplace. For these moves to happen, take out both buyers and sellers, okay? And all, people aren't just buying and selling here. They're also saying, right, when price moves above this area, I want to buy it higher. And they then place their stops below that as well, below here. There's so many different types of orders that are all taken out. Whether you're buying or whether you're selling, that move has taken you out of the marketplace. If your stops are somewhere around here, you're out. Okay, so the market is now free for them to move it in the direction that they want it to. However, they still have their own buy orders that are now in negative. Okay, and they can't lose money because they're investors, and the people that they have to pay their money to will be unhappy. So they're profiting on their sell orders, which is great, but they're losing on their buy orders. And if you've ever taken a trade where you've got a buy and a sell on at the same time, whether it moves up, whether it moves down, you don't make any money. In order for them to make money in continuation of the trend, they have to manipulate price again, bringing price back up into this area, okay? And when they get into this area, okay, they close off their buy positions. They make a little bit of money on these ones, but the ones that were here, their buy positions that were up here, that when this move happened were in a negative, they then close them off here and they're basically back to break even. Let's say they have buy positions here, okay, because they're buying and selling all the time. When they move the market down in this region, okay, and they've also got other buy positions here, ultimately they don't have stops placed, but you get the gist, okay? When they move the price down here, what happens is this trade and this trade are effectively in this much negative, okay? They're in that much of a loss. So in order for them to make their money, they have to move the price back up, buy again, buying and selling, buying, selling, buying, selling. They're all the time, but they're buying the market all the way back up to here. And then when price reaches these areas, they close that off, close it off. They close that one off. They've made a little bit of profit. But now what this does in turn is it takes out the rest of the buy orders at the marketplace and it leaves the market heavily bearish. So what they can then do is pile in a load more sell orders, okay? And then the market does the bigger move, which is to break the trend and continue lower. Okay, so that is what is happening in a supply and demand zone. The big players, they do not trade with stops. They open positions, they buy and they sell all the time, and they shift that scale. They are actively moving that scale from left and from right. Okay, they are moving it to buys, they are moving it to lows, and the collective power of the big players in the marketplace is what moves it. So whenever you see these manipulation moves that take out highs, then take out lows, that is a supply or demand zone, and that is an area we want to be paying attention to. So keep an eye out for them. Okay, if you see something that doesn't look right, that looks like manipulation, that looks like, well, you know, what's happened here? Something like this. Okay, that huge move up, that big move down, that huge move down, that big move up. These are areas that we want to pay attention to, because in doing so, they've manipulated the marketplace. And if the market's being manipulated, it means there's a hell of a lot of money in the marketplace. There's strong money in the market. And we then want to pay attention to that, because the chances are, if they've pushed the price all the way up here by these huge impulsive candles, the chances are they are losing money until price comes back down to here. So we then just draw out these areas. We set our alerts like we discussed in the last video, and that's it. We wait for price to come into them, and then I'll teach you how to trade them. Thank you again, guys, for tuning in to the second part in the supply and demand zone series. I hope that's given you a clearer understanding of why these zones are so important and why we use them in our trading. Next, we're going to build on that. We're going to talk through some examples of supply and demand, and then ultimately how we use them with our market structure to take better and more high probable trades. Now, if you haven't done so already, please make sure you like the video, you comment below, and subscribe, of course, to the channel, and pop that notification bell so you can be notified when the next part in the series comes out. Thank you.